This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot, this time for the second week now in May of 2019, first week, May 13th. May 13th. But anyways, guys, lots of interesting things have happened, right, over the last, I would say 2 weeks, right, in real estate. A lot of interesting headlines are now popping up. And it's funny because these headlines are exactly what I was talking about and exactly what I predicted was going to be happening, right? And it's like they're almost 4 to 8 to 12 weeks behind, right? Which isn't really uncommon, right? I mean, almost everything in the media, it takes time for the data to be processed, for that data to get consumed by the media and then regurgitated back to the layman. So if you're watching these market up, this is up-to-date relevant data, and we can continue to use that data and extrapolate the information that we get from it to make predictions about what's going to happen in the next 6 to 12 months, as opposed to being 6 to 12 months behind the curve. You understand what I'm saying? So good for you for watching this video. That means that you're going to be educated and you will be ahead of the curve. So not too much has changed on the county stats, guys. I'm sorry, this room is poorly lit right now. And as we can see, remember, I've been talking about this for a while. Pendings have outpaced actives for both condos, townhomes, and single-family residences for the last 3 years. This year, actives are outpacing pendings, right? So it's like if you trace the curve, it's going right, and that's been the case since the beginning of the year, right? And so, and even before March, right? And so, what this means for us is that it's almost the beginning of the end, right? Not almost, it's already the beginning of the end. And if you've been watching my videos for any period of time, you'll know that that increased inventory is a leading indicator of a market correction, right? Or a market shift, if you will. Let's not even call it a correction. Let's call it a shift, shall we? Single-family residences, active inventory up 113% since the beginning of the year. That measures acceleration in the market, or inventory acceleration. So we're way below where we were last year, which is good. It shows that we've been more steady, right? Because at the beginning of the year, we had 655. Last year, we had 266 houses on the market. And so if we experience the same acceleration as we did last year, that would mean that we are like pretty much officially in a buyer's market, because we'd have way more inventory. If that doesn't make sense to you, because I'm kind of going over this fast, I've gone over it in some other videos, reach out to me and we can talk about it. But anyways, guys, the active listings for this week, some noticeable differences right now are in South San Jose area, right? 230% up, right? And you'll see how absorption rate could be tied into some of this, because the market is reacting, right? Sellers are reacting. Guys, only 12% more homes on the market in Los Gatos as opposed to last year. That's far below the average for Santa Clara County and in Saratoga. Keep those in mind, because we're going to go over those in the when we talk about absorption rate. And the rest of the county, we're in the ones, right? And that's nothing new to be expected, right? And then Santa Teresa, another notable one. We'll be talking about Santa Teresa as well. So, absorption rate. Now, I want to talk about absorption rate because it's something that I've talked about in many videos before, and absorption rate is essentially the amount of homes, the amount of inventory that's being absorbed by the market. In other words, it measures the appetite of the buyer in real time, right? And those aren't my words. Those are my managing broker, Robert Cruz's words. It measures the appetite of a buyer, of buyers in a specific area at any given period of time. And if you measure absorption rate in specific areas over an entire county, you really get to see where the buyer appetite is higher than the average and where the buyer appetite is lower than the average. Much better statistic. Much better metric than days on market. Days on market doesn't really tell you much, right? Like if days on market is 20 in one area and 15 in another, right? Then what's 5 days, right? But what it really comes down to is if the absorption rates are drastically different, it does make a huge difference, even if the days on market aren't that different. Make sense? If it doesn't, stay tuned because it will. Okay, so we are now at absorption rate. And guys, so this is for April of 2019. So this is very up-to-date data. Remember, right, like this is the entirety of April, right, into one. And then we're now at the beginning of May. So this is, 10 days old at most, right? And look, I want to point out some very specific areas on this map. Take into account what you will, and if you want a copy of this, I can always send one to you privately. Just email me at dgould@intero.com. Guys, I wanted to talk about Saratoga and Los Gatos. Last week, I specifically mentioned or made mention of the fact that the top quartile of the market is underperforming, right? And this directly ties into the median home prices in Santa Clara County. And I will explain why. Let's look at the median home prices in Santa Clara County. Santa Clara County median house price has dropped year over year 10.6%. What? This is real. Guys, in March 2019, housing prices median house price has dropped. Okay? Now, there are still record-breaking sales happening every single day in Santa Clara County. Think about that. Why is that? Well, first of all, you have to understand what the definition of median is, right? Median is not the average, right? It is the direct center or the middle number of home price, right? Or the middle number, right? So it is essentially the not the average sales price, right? But the most in the middle, right? So if you're gauging all the prices, if you line them up, right? Like if you have 100 numbers and you line them up, the one in the middle would be the median. So if home prices in the top quartile are dropping and less homes are being sold in the top quartile because the sellers have reacted and they have chosen not to put their home on the market, right? To not sell their home, which ties into the active inventory. Excuse me. Being low, right? Like comparatively to the rest of the market, the increase in inventory has been is below the mean, right? And so if you look at that, and then you also take into account that the absorption rate in these areas, which define the buyer appetite in these areas, right, is low, right? We're talking close to 33% is considered a neutral market. We're teetering on neutral market status here, right? And so what happens? By the way, also keep in mind, look, days on market way over, a month to a month and a half now, right? As compared to most of the county, you'll see that most other areas are not like that. And why is it so important, or why am I picking on Los Gatos and Saratoga? It represents in Santa Clara County a good portion of the top quartile of that market, right? In addition to Los Altos and some parts of Mountain View, Los Altos Hills, obviously, some parts of Sunnyvale. But for the most part, Los Gatos, Saratoga, and of course I don't have Los Altos and Mountain View in here, right? But these represent, Los Gatos, Saratoga represent some of the the higher priced homes in this area. And because not as many of them are selling, right? They're taking longer to sell. And the prices there have in fact taken a hit, right? We can see why the median home price is falling, right? Quite drastically, 10%. That's nothing to sneeze at. And remember what I said in last week's video, what happens in the top quartile eventually trickles down to the rest. And we can continue to see strength or strong numbers in that bottom 3/4 of the market for a while before it catches up to us, right? But what does this mean, right? What does this mean for you, the home seller here in Santa Clara County? Well, I told you, right? If your home is less than $1.8 million, at this point, not much, right? Also, keep in mind that this really is a gross generalization of what really is going on, right? And every micro market, every specific neighborhood, every area, every home is different. And so don't think that this tells the full story, but it certainly gives us a preview of what we can expect for the future, right? Case in point, there is a really good, a really knowledgeable blogger, financial blogger, out of the North Bay. His name's Richter, and he really talked about because he focuses on Sonoma and San Francisco. The Sonoma and San Francisco markets, the median home prices dropping, and he actually predicted this quite a while back. And he himself, although he's predicted this and talked a lot about it, it made mention of the fact that this is not a collapse of the housing market, right? This is not a collapse of the housing market. I think it's a reevaluation period for a lot of home buyers and sellers. And there's some hot air, he said, being let out of the market, right? Last year, because of the suppressed inventory levels, we experienced higher than natural price appreciation. And so it's only fair and it's only right and it only makes logical sense that there will be a rebounding effect, right? That there will be a yang to the yin, if you will. And so what we've experienced over the last 6 months or so in this market is simply a result of what was going on before, right? And it's also a buildup. It's been a 10-year buildup, right? Where the market has gotten better over the last 10 years since the collapse, right? And so now we're really at a point, right? Where if you are a seller in today's market or you're considering moving, right? You need to make the conscious decision, right? Like, are you going to stay in your home for the next 5 years for it to appreciate to where it was last spring? Because that's how long it will take. The market has already softened. It's already neutralized. And by the way, like I'm talking generalities here, right? There's always differences in the market. There's always anomalies. There are plenty of homes right now that are still getting multiple offers, right? And there are still plenty of houses that are setting record-breaking prices, right? What you have to keep in mind, though, right, is that eventually that will begin to subside as well, right? It's very interesting what you see here on the absorption rate maps, right? A couple years ago, we were seeing absorption rates in the 200 to 300, which means buyer appetite was enormous compared to the amount of inventory that was on the market. Now, in many areas, it's in the 100%, and in some of the markets that represent greater than average top quartile housing prices, we are seeing absorption rates basically reflect what I predicted a couple months ago, at the beginning of the year. In fact, I was even talking about this at last year, if you watch some of my videos from last year, which is market neutralization. That's all it is. It's a stabilized market. There's no crash, there's no bubble, there's no like oh we're gonna lose our shirts, everyone's gonna get foreclosed on. That's not it, right? There's too much equity There's too much. We're at a point right now. I know I'm rambling, right? So now this is going really long. But we're at a point right now where we have actually, like, across the nation, we have more equity on paper than we've ever had before, right? So there is, I believe, $16 trillion in equity across the nation. Is that right? I have that right here. I have it right here, and I know I'm going to nerd out on you guys because it's fascinating. I have it right here. I have it right here. 16 trillion in home equity. Yes, $16 trillion in home equity. So and these are people that qualified the right way for their home. So there's no collapse. There's no shortage. Think about it this way, right? People would rather use their home as a piggy bank, right, than sell it for a huge loss, right? Because they still have the ability to tap into that equity. And so I think what we're gonna see, right, and what I'm already seeing, is people, instead of selling their home, right, home sellers, instead of selling their home, will continue to live off their home until it no longer makes sense. Now, will that cause a market crash? That remains to be seen. But for the time being, where I'm getting at is that the inventory levels are not going to go astronomically through the roof because the need is not quite there yet, right? There's not a burning economic crisis that is going to cause the vast majority of Silicon Valley home sellers to sell their home for well below market value. By that same token, buyer demand will not instantly disappear. Sure, there are micro things happening every day, trade war with China. I mean, there's always something new, right? Like, there's always something new that's going wrong with our country, right? And so as long as we can continue to realize that overall the market does not react to that it will not go either way, right? Will not be extremely positively or negatively impacted by that because of all the things I just talked about, right? It's important here in Silicon Valley for us to really start to dissect this data in real time because it does impact you, right? And more than anything, it may not change your decision, right? It may not change your decision to buy or sell, right? But that being said, it will make your decision a more educated and a more informed one. And that's what I'm here to help you guys with, is to help you make the most educated and informed decision that you possibly can. That's it, everyone. This is Danny Gould with the Gould team, selling Silicon Valley, and I'll catch you guys in the next video.